NIO stock is slightly down Monday, under $41 per share. NIO said on Monday morning that its planned secondary offering has priced at $39 per share. That's a discount of about 7.1% from Friday's close price of $41.98. This piece of information is suggesting that the bank's underwriting and offering team needs to offer clients a bit of a discount to move the shares right now. This piece of news also has me a bit skeptical, so I want to reevaluate NIO stock and discuss what this means for investors. What's going on, guys? It's Henry. If you're new to the channel, I worked on Wall Street and I'm the green Superman right here. I speak Russian and I give you all the information that you need to make the good decisions about investing in your portfolio so you can get stupid rich. Also, don't forget to get 4 free stocks from Webull when you deposit $100 linked in the description. They're a brokerage that allows you to buy and sell stocks, and this promotion is pretty sweet. Although I'm disappointed that NIO offered additional shares at $39, there was a green light, and I don't mean my shirt, it was on the demand side. NIO's offering was oversubscribed, meaning that the underwriters opted to purchase additional shares above and beyond the additional planned amounts. NIO has said last Friday that it planned to offer 60 million shares and that its underwriters, Morgan Stanley and China International Capital Corporation, had the option to purchase up to 9 million additional shares. Here's where things get better than the original headline. You see, the number of shares were revised upwards over the weekend. NIO is now selling 68 million shares at $39, and the underwriters now have a 30-day option to purchase up to 10.2 million shares. Considering the underwriters now have an option to purchase more and have already revised their opinions, it looks very likely they will exercise their option. Look at that. They have some real life options, not options trading. Options also apply to real life, huh? Essentially, NIO is about to raise a whole bunch of money at a pretty good price compared to the historical share price. 39 is below where the stock was trading a week ago, and even today, 39 is still lower than where we're trading at. That creates some downward pressure on the stock, which is not a good thing, but not a great amount since $39 per share isn't that far away from the current share price. In fact, there's a silver lining here that I'm gonna get to in a second, or should I say green lining here. If you take a look at the 6-month chart, it is a lot higher than where it was trading at a few months ago. And yes, the stock is going a bit lower, but to me, that is good news for adding more shares of the stock at a discounted price. Most people love a sale at their favorite store, right? You have some video games on sale, you have some clothes on sale, you have some food on sale. Whatever might be on sale, you're loving it because you're like, hey, I get this item for cheaper. But why do you hate a sale on your favorite stock? Does that make any sense for you? Basically, what I'm saying here is investors should treat stocks going down as favorable for a long-term investor. NIO is taking advantage of the high valuation that has resulted from crazy investor interest in skyrocketing interest from YouTube and Google searches recommending this stock as the next Tesla. For me, it makes sense. Investors are excited. I'm excited. We all want to make some money and we want to get stupid rich, and NIO will continue to make us stupid rich if the stock has good results. NIO is raising additional funds to bolster its balance sheet so they can continue to innovate and potentially release new vehicles to the market. That's still good news for the company, even if the price has to be discounted a bit to make it happen. And I think that the fact that NIO is still trading above $40 per share after the announcement shows investors are super confident in the stock, and NIO has a very strong support at the 40 level. NIO isn't raising capital as often as Nano Dimensions is, so I don't expect this to be a very common occurrence with NIO stock. I want to remind you guys of a quote that I follow closely as an ex-Wall Street worker and as a Warren Buffett enthusiast. Warren Buffett said this one time, and I think it's a super good thing for investors to keep in mind. The stock market is a device for transferring money from the impatient to the patient. Everyone is concerned about the dip. However, nobody is mentioning the huge advancement NIO will be leading in the following years. I want to discuss those advancements now for 2 main reasons. 1, to ease existing investors holding this company and remind you guys most likely why you invested in NIO to begin with. Number 2, it will help me estimate a price target for the stock that makes long-term sense for me, so I can recommend the stock being at a certain price given its fundamentals. Okay, so these new shares allow for 1, research and development of new products and next generation of autonomous driving technologies. Exactly what Cathie Wood said would take Tesla to $1 trillion market cap is the same thing that can take NIO to a $500 billion market cap at the very least. By current standards, NIO is a $55 billion company, as you guys can see here. So that would be a 10 times return, guys, to the current market cap if NIO were to go to $500 or $550 billion in market cap. That's a stupid rich amount of money to make on NIO, and that could potentially happen if they execute on autonomous driving. Don't forget, any company or person for that matter who does not invest in themselves will stay broke. Growth isn't free. Research and development is very necessary for a company to spend money on, as it is for any person investing in their education. In fact, all great companies spend money on themselves, and they do so in big quantities because they know that it's going to pay off in the future. 2, sales and service networks expansion and market penetration. And guys, they have some competition, so market penetration is important. However, happy existing customers and a strong network for fueling and battery swapping will encourage positive feedback and draw in more customers. 3, general corporate purposes. It is a good sign when a company is spending money or raising money for general corporate purposes. For example, the battery swap technology they have is a pretty good solution to the whole charging situation. And I mentioned this in the video about battery swapping, and it's right here. It's unique and it's a very fast approach, and it's also benefiting NIO tremendously, which I'm about to get in a second. It's only 3 minutes to swap a battery and send you on your way to drive another 340 kilometers or so, whichever vehicle you have. You could swap out batteries that weigh literally a ton fairly quickly, and then you can recharge the older batteries in such a way as to preserve the life longer. And that is a business system, my friends. A business system allows the company to scale operations and sell to the masses so they can create a huge amount of revenue. That swap technology may become the future, or it may become slightly less relevant in the future, but right now it's a great factor. It's great because China is boosting NIO's attractiveness by providing subsidies for new EV owners of non-luxury vehicles. And what does that have to do with battery swapping? Guess what? Governments can be as sneaky as they like and classify battery swapping as non-luxury. So NIO vehicles, although luxurious, are not classified as a luxury vehicle. Therefore, they get a subsidy by the government where Tesla cannot get a subsidy by Chinese government. It really depends on what type of breakthroughs occur with battery technology, but I don't see battery swapping being a bad thing for NIO. At worst, they can always rethink and adopt more traditional battery charging methods like Tesla should profits point in that direction and battery technology and swapping not going in the direction that they want it to. I think after this we have run out of bad news, which some of the stuff that was bad news was only short-term bad news to begin with. I think the rest of December, this stock will likely have a strong support level at $39 per share, and I would be surprised for this stock to go under $40 per share. I'm hoping for good production numbers in Q4. I'm a buyer anywhere under $39 in massive wheelbarrows, that at current prices, I'm just dollar cost averaging and optimistic on the stock long term. I can see the stock being a $70 stock in late 2021 if they continue to dominate and scale their business. My expectation is they scale operations and continue to hit record deliveries every single month, up to 10,000 vehicles and beyond. And at that point, they will still have record months, but it won't be every single month because let's be honest, scaling a business isn't so easy. NIO's doing a fantastic job, but I don't expect it to be perfect. I don't expect them to have record months every single time, but I certainly expect every quarter to be a better quarter than the last one. If you want to stay updated on Q4 numbers, then subscribe to the channel so you can be notified when I make updates and you guys can get stupid rich with the right mindset and the knowledge on NIO stock. That's it for this video. Thanks for watching. Be aggressive in learning, my friends, but be safe in investing. Fist bump.
No one ever sees me.